If you've been in the trading world for any amount of time, you've probably heard phrases like strategy is everything, find a proven system, or master the perfect setup. And to a certain extent, they sound logical. After all, if you don't have a system, how will you know when to enter or exit a trade? If you don't have a strategy, how will you find consistency? Every beginner starts here, searching for the holy grail strategy that will never fail. They jump from one method to another, buying courses, indicators, and secret formulas that promise guaranteed results. But here's the truth most traders don't want to hear. It's not your strategy that makes you profitable. It's your ability to stick to it under pressure. That ability is called discipline, and it's the one factor separating winners from losers in this game. You can have the most accurate system in the world, a 90% win rate on paper, but if you can't follow the rules of that system when money is on the line, you will fail. Period. Think about it. How many traders start with a simple moving average crossover system or price action strategy that's actually profitable if used consistently? Plenty. Yet, why do over 90% of traders still lose money? It's not because the strategy stopped working. It's because when fear, greed, or frustration entered the picture, they abandoned their plan. They cut winners too early, held on to losers too long, or took trades that weren't part of the system at all. That's not a strategy problem. That's a discipline problem. Discipline is the unglamorous, unsexy part of trading that nobody wants to talk about because it doesn't sell courses. It's not flashy. There are no magic indicators in discipline, no secret algorithms, no one weird trick that flips your account overnight. Discipline is boring. It's doing the same thing every day, even when you feel like doing something else. It's following your rules to the letter, even when your emotions are screaming at you to break them. It's saying no to impulsive trades, no to revenge trading, no to the urge to double your lot size after a win. The truth is, most traders already have strategies that could make them profitable, but very few have the mindset to execute that strategy without interference. They think they need more knowledge, more tools, more indicators, when what they really need is self-control. Because trading is not about predicting the market perfectly. It's about controlling yourself when the market tempts you to do the wrong thing. Imagine two traders. Trader A has the most advanced algorithmic strategy ever created, tested over 10 years. Highly profitable, with precise entry and exit points. Trader B uses a simple breakout strategy that anyone could learn in 10 minutes. Now, here's the twist. Trader A lacks discipline. The moment they take 2 losses in a row, they start tweaking their system, taking unplanned trades, and increasing risk out of frustration. Trader B, on the other hand, follows their simple plan with military precision, never breaking a single rule, no matter how they feel. Who do you think wins in the long run? Trader B. Every single time. Not because their strategy is better, but because their discipline is stronger. This is the biggest misconception in trading. People think results come from complexity. They think success is hidden in some advanced technical pattern or a new indicator nobody knows about. But if you study the best traders in the world, you'll notice something shocking. Their strategies are often simple. Support and resistance, trend following, breakouts, supply and demand. The complexity is not in the strategy. It's in the mindset required to apply it consistently without self-sabotage. So why is discipline so hard? Because trading is a psychological battlefield. Every time you click that buy or sell button, you're going against thousands of years of human instinct. Our brains are wired for survival, not for probability. When you see a trade going against you, your instinct is to hold on, hoping it turns around, because cutting a loss feels like accepting defeat. When you see a trade in profit, your instinct is to close it quickly before it disappears, because you want to protect what you've gained. These instincts are the exact opposite of what good trading requires. Cutting losses fast and letting winners run. That's why discipline matters more than any strategy. It's not just about following rules. It's about fighting your own biology. Before we dive deeper, let me ask you this. Are you struggling with fear, doubt, or overtrading? The truth is, most traders don't fail because of bad strategies. They fail because of bad psychology. That's why I created my ebook, Master Your Mind, Master Your Trades. It's packed with practical steps to control your emotions, stay disciplined, and trade like a pro. If you're ready to take your trading to the next level, check the link in the description and pinned comment, and grab your copy today. Now let's continue. Think about your own trading history. How many times have you had a plan for a trade, but the moment you were in the position, everything changed? You told yourself you'd risk only 2% per trade, but after one big win, you risked 10% on the next trade because you felt unstoppable. You promised you'd never move your stop loss, but when the price came close, you dragged it further away because you couldn't accept being wrong. You vowed never to revenge trade, but after a loss, you jumped back in just to get even. These are not strategy failures. These are discipline failures, and they are the real reason most traders never make it. The market doesn't punish bad strategies as much as it punishes bad discipline. A trader with discipline and a mediocre strategy can still win in the long run because they control risk, stay consistent, and avoid emotional decisions. But a trader with the best strategy in the world and no discipline will blow their account eventually. It's not a matter of if, it's a matter of when. So what does this mean for you? It means stop chasing perfection in your strategy. Stop thinking that the next course, the next mentor, or the next indicator will change your life. None of that matters if you can't control yourself when the market moves against you. The real work of trading is not on the charts, it's in your head. Your success depends on whether you can stick to your plan when it's hardest to do so. Discipline is the foundation of every great trader's success. Without it, everything else crumbles. With it, even a simple system can build wealth over time. That's why discipline beats strategy every time. Because strategies don't fail traders. Traders fail strategies. Discipline isn't just about following rules. It's about building a mindset that can withstand the constant push and pull of the market. Every price movement, every candlestick, every indicator is a test of your self-control. The chart doesn't care about your feelings, your ego, or your need to be right. It only reflects what is happening, and it's your responsibility to respond correctly. Traders who fail usually respond incorrectly because they let emotions override logic. The first step in mastering discipline is understanding that trading is not about predicting outcomes. It's about executing a plan under uncertainty. Emotional control is the hidden edge every successful trader has. While beginners focus on setups, indicators, or strategies, top traders spend most of their time managing themselves. Fear, greed, and hope are not just obstacles, they are active enemies that sabotage every trade. Fear makes you hesitate. You see a perfect setup, but instead of entering, you wait for confirmation that may never come. You let potential opportunity slip because your brain is wired to avoid loss. Greed makes you overtrade. One winning trade turns into 3, 4, 5 impulsive trades because you want more, forgetting that each trade carries risk. Hope traps you in losing positions. You tell yourself, it'll come back, and you hold on far longer than the plan allows. The market doesn't owe you anything, but your discipline gives you everything. Most traders fail not because they don't know how to trade. They fail because they cannot control the simple things that the market demands. Discipline is doing what needs to be done even when it feels wrong. It's taking a loss when your rules tell you to, even when your gut screams to hold. It's taking profits according to your plan, even when the market appears ready to run further. Discipline is consistent action over long periods, day after day, trade after trade. Strategies can be copied, discipline cannot. It must be built, tested, and strengthened over time. The core of emotional control is neutrality. Neutrality doesn't mean being cold or emotionless. It means detaching from the outcome and focusing on the process. Neutral traders don't celebrate wins too early, and they don't panic over losses. They follow their rules regardless of recent outcomes, because they understand that no single trade defines them. Their self-worth is not tied to profit and loss. It's tied to execution. This mindset creates calm, which is the ultimate advantage in trading. Calm traders make rational decisions. Panicked traders make reckless ones. Neutrality allows you to see the market as it is, not as you wish it to be. Staying calm when the market moves against you is easier said than done. Every trader has felt that pit in their stomach when a trade goes red. That moment is critical. It is the dividing line between traders who grow accounts and traders who blow them up. Discipline allows you to stick to your plan even when it hurts. It's tempting to move stops, add to positions, or chase losses. But every deviation from your rules compounds the risk. Traders who master emotional control understand that each trade is only a small part of a much larger journey. One loss does not ruin them. One win does not make them reckless. They approach every decision with measured logic, not impulsive desire. The development of emotional discipline is not instant. It is honed through repetition and reflection. Journaling trades, reviewing mistakes, and analyzing decisions are all part of building this skill. The market doesn't forgive emotional errors. Every impulsive trade, every rule violation, every reaction to fear or greed leaves an imprint on your account. By documenting what works and what doesn't, you turn mistakes into lessons and emotional impulses into awareness. Over time, this transforms your trading from reactive to proactive. You learn to anticipate how your emotions will react and to act before those emotions dictate your choices. Risk control is a natural byproduct of emotional discipline. Traders who cannot control emotions tend to over-leverage, over-trade, and violate position sizing rules. Traders who master discipline know exactly how much risk each trade carries, how much of their account they are willing to lose, and when to step aside. Discipline ensures that no single trade can destroy the account. It creates a framework where losses are temporary setbacks, not catastrophic failures. This risk-aware mindset allows you to trade with confidence, even in volatile markets. Discipline also prevents the destructive cycle of revenge trading. Many traders know the feeling. A loss triggers anger, frustration, or self-doubt, and suddenly you're making trades to get even. These trades are never based on strategy, they are based on emotion. They almost always fail. Emotional traders fight the market rather than following it. Disciplined traders, in contrast, step back, follow the rules, and wait for the next valid setup. They understand that the market does not respond to their anger or impatience. Success comes to those who execute the plan, not those who chase emotion. Another critical aspect of discipline is patience. The market is not your enemy, it is a teacher. Many traders jump into trades because they feel bored, anxious, or eager. They see patterns everywhere, forcing setups that don't meet their criteria. Discipline teaches you to wait. It teaches you that the best trades are often the ones you haven't taken yet. Patience reduces mistakes and allows for better positioning. Traders who act impulsively miss entries, take suboptimal trades, and increase risk. Traders who wait and stick to their rules see the market with clarity and exploit opportunities with precision. Discipline is also a form of resilience. The market will never go in a straight line, and losing streaks are inevitable. Traders who lack discipline fold under pressure. They abandon systems, change strategies too quickly, and allow losses to grow. Traders with discipline maintain consistency. They take the hits, follow the rules, and know that small losses are part of a larger profit plan. Resilience allows them to continue growing even when others quit. It is the invisible force that keeps accounts alive and enables compounding over time. In the end, discipline is not just about avoiding mistakes, it's about creating opportunity. By controlling emotions, sticking to your rules, and approaching each trade with neutrality, you place yourself in a position to profit repeatedly. The trader who masters discipline consistently applies their edge, avoids unnecessary risk, and survives the inevitable downturns that destroy undisciplined accounts. The market rewards patience, consistency, and emotional control more than any technical indicator ever could. Think about your own trading. How often have you had an opportunity slip by because fear stopped you? How often have greed pushed you into unnecessary trades? How often have hope or frustration caused you to deviate from a plan that would have worked? Every time you answer yes, it is a lesson. Discipline is not a one-time achievement. It is a lifelong practice. Each trade is a test, and each test is an opportunity to strengthen your mind. Discipline beats strategy every time because it ensures that the best opportunities are executed, mistakes are minimized, and risk is managed. Strategies don't make profits. Disciplined execution does. Traders with discipline consistently outperform those with better systems because they can survive losses, capitalize on edges, and approach the market with clarity. Without discipline, even the perfect strategy is doomed. With discipline, even a simple system can create extraordinary results. Ask yourself this: are you trading your strategy or are you trading your emotions? The answer will define your success. Consistency in trading is not about finding the perfect strategy or catching every market move. It is about creating a system that your mind can follow without hesitation. Many traders fail because they believe success comes from complexity, from the perfect combination of indicators, patterns, or insider knowledge. The truth is simpler and harder. Success comes from disciplined repetition. Each trade is not about being right. It is about executing a plan with precision, regardless of emotion, outcome, or recent history. Discipline ensures that you act when opportunities align with your rules and stand aside when they don't. Without it, even the most brilliant strategy collapses under the weight of human error. The challenge is that the human brain is wired to seek rewards and avoid pain. Trading exploits this wiring in every possible way. A small loss triggers fear, a small gain triggers greed, and the mind constantly tries to override logic with emotional impulses. Traders who fail let these impulses dictate their actions. They chase profits, double down on losses, and abandon rules whenever discomfort arises. Discipline, in contrast, provides a framework to resist these impulses. It allows you to focus on execution, not outcome. It transforms a reactive trader into a proactive one, and it is the single trait that separates consistent winners from repeated losers. One of the hardest lessons in trading is that the market does not care about your position. No setup guarantees profit, no signal ensures success. This is where discipline becomes invaluable. A disciplined trader accepts uncertainty, follows their edge, and moves on. They don't become attached to trades, and they don't seek validation from the market. Each trade is just one of many in a carefully structured plan. This mindset creates clarity. When you detach from the need to be right, you see opportunities objectively and act decisively. Without discipline, the need to be right clouds judgment, forces risky decisions, and increases the likelihood of catastrophic loss. Discipline also governs risk control. Traders who fail often gamble on positions that are too large, use leverage irresponsibly, or ignore stop-loss rules. These behaviors are driven by ego and emotion, not logic. Disciplined traders follow strict risk management protocols. Each trade has a defined risk, a clear exit, and a predetermined position size. Losses are accepted as part of the system, not personal failures. The discipline to adhere to these rules protects capital, preserves opportunities, and allows long-term compounding. No strategy can compensate for reckless risk management, but discipline can make a simple strategy consistently profitable. Another key element of discipline is patience. The market moves at its own pace, and the best opportunities don't happen every hour or every day. Undisciplined traders feel compelled to act constantly. They take trades that are outside their system or force setups that aren't valid. Patience is not passive, it is an active form of control. Waiting for the right conditions, for confirmation, or for setups that meet all criteria reduces mistakes and increases profitability. It is the difference between catching a perfect trade and entering an impulse position that ends in a loss. Discipline trains you to wait, observe, and execute only when conditions are optimal. Emotional resilience is a natural companion to discipline. Traders will experience losing streaks, drawdowns, and unexpected volatility. Undisciplined traders panic, abandon systems, or overtrade to make up losses. Disciplined traders treat each trade as part of a larger process. Losses are temporary, outcomes are probabilistic, and the plan is the constant. This resilience allows for consistent performance even during challenging periods. It builds confidence not from being always right, but from knowing that the system works and that you can execute it consistently. This confidence is grounded in action, not wishful thinking. Routine is another powerful tool for discipline. The most successful traders do not leave their decisions to chance or mood. They follow a structured schedule that includes pre-market analysis, clear entry and exit criteria, position sizing, and post-market review. Routines create consistency because they remove subjective decision-making. When the process is standardized, emotions have less influence. Each step is designed to reinforce disciplined behavior. Over time, following a routine becomes automatic. Discipline shifts from being a constant battle against impulses to becoming the natural state of operation. The trader acts correctly by default, not by force. A key reason discipline beats strategy is that even the most effective strategy can fail if applied inconsistently. Two traders may use the same technical indicators, signals, or patterns. One follows the rules with discipline, executing each trade according to plan. The other allows emotion to dictate actions, skipping trades, changing stop levels, or over-leveraging positions. The difference in results is vast. The disciplined trader will experience losses but grow steadily. The undisciplined trader may have occasional wins but will likely blow the account. The market doesn't punish strategy. It punishes inconsistency. The psychological foundation of discipline also reinforces learning. Every trade is a feedback loop. Disciplined traders analyze outcomes, identify errors, and refine their approach. They don't overreact to wins or losses because their mindset is process-oriented. This learning mindset prevents repeated mistakes and builds mastery over time. Undisciplined traders, by contrast, focus on results, let emotions cloud judgment, and often repeat the same errors. Discipline turns trading into a science, a methodical practice of continuous improvement. Without it, trading becomes a gamble, where luck dominates skill. One of the most overlooked aspects of discipline is controlling your environment. Professional traders recognize that external factors, news, social media, opinions, and peers, can disrupt mental clarity. Undisciplined traders react to every headline, rumor, or tweet, letting noise dictate trades. Disciplined traders control what they consume, limit distractions, and focus on what matters: their plan, risk, and execution. This selective focus enhances decision-making and reinforces consistency. Discipline is not just about internal control. It's about managing everything that influences your mindset. Even the act of journaling trades is a form of discipline. Recording every entry, exit, rationale, and outcome builds accountability. It makes traders face mistakes honestly, recognize patterns of behavior, and refine strategies. Journals transform emotional impulses into concrete lessons. They force you to confront areas where discipline falters and provide a roadmap to improvement. Undisciplined traders ignore documentation, avoid self-reflection, and miss opportunities to grow. Consistently journaling is both a practice of discipline and a reinforcement of it, solidifying skills that lead to long-term success. In conclusion, discipline is the cornerstone of trading success. Strategies can be replicated, indicators can be learned, and patterns can be studied. But only discipline ensures consistent execution. It governs emotions, enforces risk management, builds resilience, and transforms routine into automatic action. Every trader faces the temptation to act impulsively, chase profits, or react to fear. Discipline is the shield that protects your account, the compass that guides your decisions, and the engine that drives long-term growth. Without it, even the best strategy is destined to fail. With it, even a simple approach can generate extraordinary results. Ask yourself now, are you following your strategy with discipline, or are your emotions still running the show? Discipline in trading is often misunderstood. Many traders think it is about forcing yourself to sit through trades, resisting temptation, or simply following rules blindly. In reality, discipline is a mindset, a system, and a habit, all at once. It is the ability to act according to your plan, regardless of fear, greed, or distraction. It is about creating a framework where good decisions become automatic and bad impulses are neutralized before they can manifest. Without this, even the most advanced strategy is powerless. The market is indifferent to knowledge, skill, or clever indicators. It rewards those who can control themselves more than those who can predict every move. One of the most common pitfalls for traders is overtrading. Every trader experiences the urge to enter the market constantly. Every news headline, chart formation, or price spike tempts you to act. Undisciplined traders give in to this urge, treating every movement as an opportunity. This behavior leads to small, frequent losses that compound over time. Discipline teaches you to wait for setups that meet your criteria, to ignore noise, and to act only when your edge is present. It is not about being inactive. It is about being selective and intentional. Each trade becomes a calculated decision rather than a reaction to emotion or boredom. Patience is a cornerstone of this discipline. Traders often equate action with productivity. They feel that being busy, entering more trades, or reacting quickly equates to being a good trader. The opposite is true. Professional traders understand that waiting for the right trade is more profitable than forcing trades to satisfy psychological needs. Patience allows you to avoid low-quality setups and reduces exposure to risk. It strengthens confidence because each trade taken has been evaluated objectively. Discipline creates this patience, turning it from a conscious effort into an instinctive habit. You wait, you observe, and you act only when conditions align. Risk management is inseparable from discipline. Traders often believe that a profitable strategy alone will keep them in the game. This is false. A strategy is only as effective as your ability to manage risk. Discipline enforces position sizing, stop losses, and risk limits. It ensures that a single trade cannot devastate your account and that losses are controlled, predictable, and manageable. When you follow strict risk protocols, fear and greed lose their power. You no longer make decisions based on emotions. You make them based on predefined rules. The discipline to manage risk transforms trading from gambling into a structured, calculated practice. Emotional control is another key aspect. Fear and greed are not merely obstacles, they are the market's most effective traps. Fear causes hesitation, forcing traders to exit positions too early or avoid valid setups. Greed causes over-leveraging, chasing losses, and taking unnecessary risks. Discipline acts as a buffer, a safeguard that keeps emotions from dictating action. It allows you to view trades objectively, accepting losses as a natural part of the process, and wins as confirmation of correct execution, not validation of skill. Emotional resilience is built through repeated disciplined behavior, reinforcing calm, focus, and rationality under pressure. Routine amplifies discipline. Professional traders operate within structured daily frameworks that guide every action. Pre-market preparation, market analysis, position planning, trade execution, and post-market review become habits that minimize cognitive load. When actions are habitual, there is less room for impulsive decisions. Routine converts discipline into an automatic system. Even in periods of stress or market turbulence, the trader continues to act according to plan because the behavior is ingrained. Over time, this habitual discipline compounds, creating consistency in performance that outlasts individual market events. Another element of disciplined trading is reflection. Every trade, regardless of outcome, provides feedback. Traders who lack discipline avoid this reflection, dismiss losses, or rationalize mistakes. Disciplined traders analyze their actions, identify errors, and adjust behavior. Journaling trades is a common practice because it creates accountability and fosters continuous improvement. Discipline is strengthened each time you learn from a mistake rather than ignoring it. Reflection turns experience into wisdom, ensuring that each decision improves the next. It transforms trading from trial and error into a process of mastery. Discipline also requires controlling external influences. News, social media, and peer opinions often sway traders into irrational decisions. Undisciplined traders react impulsively to headlines, rumors, or market chatter, while disciplined traders filter what they consume and focus only on information relevant to their system. This selective focus reduces mental clutter and allows clarity in decision-making. Discipline is not only about internal control, it is about shaping your environment to support correct behavior. The professional trader builds a space where distractions are minimized and focus is maximized. Importantly, discipline strengthens confidence without relying on outcomes. Many traders tie confidence to wins, creating a fragile belief system vulnerable to losses. Disciplined traders base confidence on execution, not results. Each correct trade reinforces the process, independent of whether the market favors them. Over time, this approach builds unshakable self-belief because it is grounded in skill, routine, and systematic behavior. Confidence rooted in discipline allows you to remain calm during drawdowns, act decisively in opportunities, and recover quickly from mistakes. Discipline also fosters a long-term perspective. Trading is not a series of isolated wins or losses. It is a continuous journey of capital preservation and growth. Undisciplined traders focus on short-term results, chasing immediate gratification. Disciplined traders focus on executing their edge repeatedly, knowing that consistent application will yield compounding results. Discipline creates patience, resilience, and the ability to tolerate temporary setbacks, which are essential for sustained profitability. Over time, disciplined behavior accumulates into a significant advantage that no short-term market movement can erase. Finally, discipline transforms uncertainty into opportunity. Every trade carries inherent risk and unpredictability. Without discipline, uncertainty creates fear, hesitation, and reactive behavior. With discipline, uncertainty becomes a controlled variable. You plan for various outcomes, set risk limits, and accept that losses are part of the system. This mindset allows you to act confidently in the face of unpredictability, seizing high-probability opportunities while protecting capital. Discipline turns chaos into structure, emotion into rationality, and potential losses into calculated risk. In conclusion, discipline is not optional in trading. It is the foundation of success. Strategy, indicators, and analysis provide the framework, but only disciplined execution ensures results. It governs emotions, enforces risk management, builds resilience, and transforms routine into automatic, profitable action. Every trader faces the challenge of impulses, fear, and greed, but those who cultivate discipline create a consistent edge. It is the difference between repeated failure and sustained success, between gambling and mastery. The question is not whether you have the right strategy, but whether you have the discipline to follow it consistently. Ask yourself, are you acting on your plan with unwavering discipline, or are emotions still deciding your trades? Discipline in trading is not just a habit. It is the lifeline that separates surviving traders from those who repeatedly blow accounts. Every trader has access to strategies, indicators, and charts, but only a disciplined trader consistently applies them. Discipline means showing up every day with the same focus, controlling impulses, and following rules regardless of emotions. It is the invisible hand guiding every decision, ensuring that your actions are aligned with your edge, risk management plan, and long-term objectives. Without it, even the most brilliant strategy fails. One of the first tests of discipline comes in position sizing. Many traders believe that success depends on predicting market direction, yet the real differentiator is controlling exposure. Undisciplined traders risk too much on a single trade, chasing potential gains while ignoring the consequences of a loss. Discipline enforces the opposite. You know exactly how much you are willing to risk, and you stick to it no matter how tempting the market seems. This creates a psychological buffer. Losses don't feel catastrophic, which allows you to trade with clarity rather than panic. Position sizing is a direct application of discipline because it transforms emotional risk into mechanical risk that can be managed consistently. Stop losses are another critical area where discipline proves its value. Many traders avoid stops because they fear missing a rebound or getting stopped out prematurely. Indiscipline leads them to move stops, widen them unnecessarily, or remove them altogether. Discipline enforces the exact placement of stop losses, sticking to predefined rules without second-guessing. It is the mechanism that turns fear into structure. By following your stop-loss rules, you protect your account from emotional reactions and large drawdowns, ensuring that a single bad trade cannot derail your progress. Discipline in stop-loss management is the difference between survival and repeated failure. The concept of routine cannot be overstated. Discipline is strengthened when your trading day is structured around repeatable actions. Pre-market preparation, identifying setups, evaluating risk-reward ratios, and reviewing previous trades all form a system. Undisciplined traders operate reactively, scanning charts aimlessly, entering trades impulsively, and learning little from mistakes. Disciplined traders follow a routine that reduces decision fatigue, making high-quality execution almost automatic. Repetition of disciplined behavior builds momentum. Each day becomes an opportunity to reinforce control, improve decision-making, and maintain focus under pressure. Emotions are the silent killers of trading accounts, and discipline is the antidote. Fear and greed distort judgment, causing hesitation, overtrading, and impulsive decisions. Greed drives traders to increase risk after wins, while fear pushes them to exit trades prematurely or avoid opportunities altogether. Discipline allows you to observe these impulses without succumbing to them. You understand that every trade is just one of many, and that consistent application of your plan is more important than the outcome of any single trade. Emotional control, built through disciplined practice, transforms trading from a reactive process into a strategic one. Another aspect of disciplined trading is reflection. Keeping a trade journal is not merely about recording numbers. It is about evaluating your behavior, decisions, and emotional responses. Discipline requires honesty during this process. Undisciplined traders rationalize mistakes, ignore poor decisions, or blame external factors. Disciplined traders analyze their actions, identify patterns, and adjust behavior accordingly. Reflection converts experience into insight, allowing you to improve continually. Discipline ensures that learning is structured and actionable, so each trade contributes to long-term growth rather than repeating mistakes. Discipline also extends to market selection and patience. Many traders enter markets indiscriminately, chasing volatility or news events without considering whether conditions match their strategy. Indiscipline leads to low-quality setups, excessive exposure, and erratic results. Disciplined traders wait for high-probability conditions, even if it means sitting on the sidelines for extended periods. Patience becomes a weapon, allowing you to conserve capital and act only when opportunities align with your edge. This selective behavior reinforces confidence and reduces stress, as each trade is intentional rather than reactive. Consistency is the ultimate product of discipline. Traders often measure success by wins and losses, but the real measure is repeated, controlled execution. Discipline ensures that regardless of short-term results, your actions are aligned with your strategy, risk rules, and mental framework. Over time, disciplined execution compounds. Small, consistent gains, when protected and reinforced through rules, accumulate into substantial, long-term results. Profits become predictable not because the market is predictable, but because your disciplined approach is reliable. External influences are another battlefield for discipline. Market news, social media, and peer opinions constantly attempt to sway traders. Undisciplined traders react impulsively, abandoning their plans based on noise or emotion. Disciplined traders filter information, focusing only on relevant inputs, and maintain a steady hand in the face of distractions. The ability to ignore outside chaos is as important as following your own rules. Discipline transforms the external environment from a source of stress into a controlled variable that supports your system. Discipline also strengthens self-confidence independent of outcomes. Many traders link confidence to wins, making it fragile and outcome-dependent. Disciplined traders base confidence on process, not results. Each correct decision reinforces belief in the system, regardless of whether the trade succeeds. This form of confidence allows you to navigate drawdowns calmly, act decisively when opportunities arise, and recover quickly from setbacks. Process-driven confidence, grounded in discipline, is resilient, scalable, and sustainable over a trading career. Finally, discipline teaches acceptance. Losses are not failures when they occur within a controlled, disciplined framework. They are feedback, information that guides improvement and refinement. Undisciplined traders view losses as personal attacks, triggering emotional reactions that lead to revenge trading or overcompensation. Disciplined traders maintain objectivity, using losses as part of the system. Acceptance allows you to operate under uncertainty with confidence, knowing that outcomes are probabilistic and that your disciplined behavior gives you a long-term edge. In trading, discipline is the bridge between strategy and results. It turns knowledge into execution, plans into profits, and mistakes into learning. Without discipline, even the most advanced systems fail, and traders become reactive, emotional, and inconsistent. With discipline, trades become calculated, routine becomes automatic, and outcomes are guided by rules rather than impulses. Every trader faces the challenge of maintaining discipline, but those who succeed consistently apply it. Discipline is not optional. It is the foundation of sustained profitability, emotional control, and professional mastery. Ask yourself, are your trades governed by discipline, or are they still subject to impulses, fear, and short-term emotion? Trading is not a sprint. It's a marathon filled with challenges, uncertainty, and moments of self-doubt. Most traders fail because they approach it as a quick race for easy money. They expect instant results, fast profits, and a straight path to success. The reality is different. The market will test you in ways you never imagined, and only those who can stay emotionally steady through losing streaks, drawdowns, and unexpected setbacks will survive. This ability is called emotional resilience, and it is one of the most powerful traits a trader can develop. Emotional resilience is what allows you to wake up the day after a crushing loss and still approach the market with a clear mind. It is what keeps you from throwing away your strategy just because you had a bad week. It is what stops you from risking your entire account out of frustration or greed. You can have the most advanced strategy in the world, but without resilience, that strategy means nothing. The truth is that trading will hurt you at times. You will experience losing streaks, you will see profits vanish, and you will question whether you are good enough. The traders who last are not the ones who avoid pain, they are the ones who can take the pain and keep moving forward. Why do so many traders lose discipline when things go wrong? The reason lies in how the human brain is wired. When you lose money, your brain sees it as a threat, just like a predator chasing you in the wild. Stress hormones flood your system, clouding your judgment and pushing you toward emotional decisions. This is why so many traders take revenge trades, double their risk after a loss, or abandon their plan altogether. They are no longer thinking logically, they are reacting to fear. Building emotional resilience means learning how to control those reactions. It means accepting losses as part of the process and training yourself to stay calm when your instincts scream otherwise. The first step to building resilience is detaching your self-worth from your trading results. Most traders tie their identity to every win and loss. When they win, they feel smart and confident. When they lose, they feel like a failure. This mindset is toxic because it creates unnecessary pressure. You must understand that a losing trade does not mean you are a loser. It is simply a business expense in the game of probabilities. Another key element of resilience is preparation. Every day before you trade, take a few minutes to mentally prepare for all possible outcomes. Picture yourself losing a trade and staying calm. Picture yourself winning and still sticking to your plan. When you train your mind to accept both scenarios, you reduce emotional shock when reality hits. Risk management also plays a huge role in emotional resilience. If one losing trade can ruin your day or your entire account, you are risking too much. Resilience becomes impossible when the stakes are so high that every trade feels like life or death. Lower your risk to the point where a loss feels manageable, like paying for a business expense. This is how professional traders think. They do not panic over individual losses because their risk is under control. Another powerful way to build resilience is to have a bounce-back routine. After a loss, do not jump into another trade immediately. Take a short break, breathe, and review what happened. Ask yourself one question: did I follow my plan? If the answer is yes, then the loss is just part of the game. If the answer is no, fix the mistake before entering again. This habit alone can save you from blowing your account through emotional trading. Finally, reward yourself for following your rules, not just for making money. If you only feel good when you win, you will naturally start chasing wins and breaking discipline. But if you celebrate the fact that you executed your plan perfectly, even on a losing trade, you reinforce the behavior that leads to long-term success. Resilience is not about ignoring emotions or pretending to be a robot. It is about acknowledging emotions, controlling them, and refusing to let them control your decisions. Trading will always test you. There will be losing streaks, shocking news events, and days when nothing goes as planned. If you lack resilience, you will give up or blow your account. But if you build resilience, you will keep moving forward, no matter what the market throws at you. The traders who win in the long run are not the ones with the perfect strategy. They are the ones who can survive the storms without losing control. So ask yourself, when the next storm comes, will you be strong enough to stay disciplined? Or will you let emotions destroy everything you've worked for? At the beginning of every trader's journey, discipline feels like a prison. It feels like you are constantly holding yourself back, missing out on opportunities, and restricting yourself from doing what you truly want. You see charts moving fast, price spiking, and your heart races with excitement. Every fiber in your body screams to jump in, and yet your rules whisper, wait, and you wait. While you're waiting, someone on social media posts a screenshot of a massive profit. They brag about catching the big move, and you think to yourself, if only I broke the rules this one time, I could have made that too. This is the reality most traders face in the beginning. Discipline feels boring. It feels slow. It feels like you're doing less while everyone else is doing more. But here's the truth. Those traders flashing big wins rarely last. They don't post the days when they blow up their account. They disappear quietly after the market humbles them. Discipline, on the other hand, doesn't disappear. It doesn't rely on luck. It stays. And in the end, it wins. If you've made it this far in the book, you already know what happens when you ignore your rules. You've felt the pain of chasing a move only for the market to reverse against you. You've held on to losing trades because you believed it would turn around, and instead, you watched your account sink deeper into the red. You've moved your stop loss because you couldn't accept being wrong. And every single time, the story ended the same way. Losses piled up, confidence dropped, and frustration set in. On the other side, there were moments when you followed your rules. Maybe you took a loss, but you respected your plan. Maybe you waited patiently for your setup, and when it came, you executed perfectly. How did you feel in those moments? Controlled, calm, confident. That's not an accident. That's what discipline gives you. Control over yourself in a game where everything else is uncontrollable. The biggest breakthrough for traders doesn't come from discovering some secret strategy. It comes from finally understanding one simple truth. You will never control the market, but you can control yourself. Read that again. Let it sink in. You cannot control the charts. You cannot control the news. You cannot control the candles. But you can control what you do in response. And when you master that, everything changes. Suddenly, you stop trying to predict every tick. You stop needing to be right all the time. You let go of the obsession with perfection. Instead, you focus on execution. You focus on process. You focus on consistency. And that shift, from outcome to process, is where real success begins. Think about a casino for a moment. Do you think the casino cares about one single spin of the roulette wheel? Not at all. They know their edge. They know that if they run the game long enough, they win. That's how you must think as a trader. Every trade you take is just one spin. It means nothing by itself. But over 100 trades, over 1,000 trades, that's where your edge shows up, if you stick to it. And that "if" is what separates winners from losers. Here's the hard truth most traders ignore. They don't fail because they lack knowledge. They fail because they lack discipline. They know what to do. They just don't do it. They let greed, fear, and impatience take over. They move stops. They over-leverage. They revenge trade. And slowly, quietly, they blow up. It's not a lack of strategy that kills traders. It's a lack of self-control. Discipline feels hard in the beginning because it demands sacrifice. It demands that you put long-term success above short-term pleasure. It demands that you skip trades that don't fit your plan, even if they look tempting. It demands that you take small losses instead of holding and hoping. It demands that you risk less when everyone else is risking more, but over time, something magical happens. That discipline starts to feel natural. It becomes a habit. It becomes part of who you are. And that's when everything shifts. One day, you'll look back and realize the same rules that once felt like chains now set you free. You'll see other traders chasing every spike, blowing up accounts, and you'll feel nothing but gratitude that you're no longer in that cycle. You'll understand that freedom in trading doesn't come from doing whatever you want. It comes from mastering yourself so completely that nothing the market does can shake you. This is where most traders never reach. They stay stuck in the early stages, chasing quick wins and blowing accounts. They confuse excitement with progress. They trade for the rush, not the result. And the market punishes them for it every single time. But not you. Not if you make the choice today to commit to discipline above everything else. Here's the real question every trader must answer. Do you want to be the trader who hopes for luck, or the trader who builds a future through discipline? One lives in a cycle of highs and lows, big wins followed by devastating losses. The other lives in control, steadily compounding, slowly building wealth and freedom. The choice is yours. Trading is not about making one lucky trade that changes your life. It's about making hundreds of disciplined trades that build a future. It's not about one big win. It's about stacking small, consistent wins over and over again. That's what discipline does for you. It doesn't just protect your capital, it builds your confidence. It creates consistency. And eventually, it creates freedom, the kind of freedom you dreamed about when you first started trading. When that day comes, when you no longer fight your rules but embrace them, When you no longer feel fear or greed but calm and control, you'll understand the truth behind this entire book. Discipline will always beat strategy. Every time. So, the next time you feel the urge to break your rules, the next time you think, just this once, remind yourself of this. Every undisciplined trade is a step away from freedom. Every disciplined trade is a step toward it. Which direction do you want to go? The market will always test you. It will always tempt you. But if you stay disciplined, if you choose process over impulse, patience over greed, you will not just survive this game. You will win. And when you win, it won't be because of the perfect strategy. It won't be because you guessed the market right. It will be because you mastered the hardest part of trading, yourself. This is the truth no one wants to hear. But every successful trader knows. The moment you master discipline, you stop chasing the market, and the market starts rewarding you. The question now is simple. Are you ready to choose discipline and claim your freedom?